Nvidia shares still lower and dragging down the rest of the semis after that surprise $5.5 billion hit tied to China chip export controls. But the restrictions may represent an opening for one Chinese competitor. Deirdre Bosa tells us why in today's Tech Check. Dee.
Hey, good morning, Leslie. So put simply, the latest controls, they boost Huawei while Nvidia pays the price. They ban H20s, but they do nothing to cut Huawei off from the tools and the components needed to build its own chips and systems. And this really hits on a theme that has been most threatening to American AI dominance this year. Necessity is the mother of invention. It's not that Huawei comes anywhere close to Nvidia's capability in terms of raw performance or ecosystem. It doesn't. And in fact, the H20 chips Nvidia was selling to China, they were inferior too. The reason Nvidia has to write them off anyways is because no one outside of China would actively choose to use them when presented with a choice. China hasn't had a choice, though, of course, thanks to those existing export controls that banned the higher-end semis. Now, just like DeepSeek, a Chinese startup that built a GPT-4 level model with far fewer resources, Huawei is pushing to offer its own alternative to Nvidia, and now with far more urgency. Moreover, the Chinese government and companies, they're even more incentivized to use them. Huawei, meanwhile, it's already getting better at doing more with less. Its latest AI infrastructure architecture, it essentially stitches together more hardware to create something that reportedly mimics the performance of Nvidia's high-end systems. This isn't efficient, it's not elegant, but it is effective enough to keep moving forward without U.S. chips. And that is critical because as Chinese AI at large gains more independence, that ultimately hits American leverage. Export controls, they only work if China needs what we are denying. Once domestic alternatives exist, the U.S. loses the ability to slow development. It also weakens U.S. influence in multilateral talks, tech standards, global supply chains. That is what is at stake here. Now, today's move, it's bearish for Nvidia in the near term as we see shares down 6.5%. But the bigger risk for investors is the long-term erosion of Nvidia's dominance and, more broadly, the way that American versus Chinese AI develops. Capital-intensive versus constraint-driven. The latter can scale faster, cheaper, and be adopted more broadly, and this could tip the AI arms race away from who builds the best tech to who builds the most accessible one. Really important to keep our eye on, guys, as these restrictions come out and as we look at the past ones that also haven't worked.
Yeah, we had a long discussion with Jim this morning about the pace of innovation in China. You mentioned Huawei, but there's BYD, and of course the DeepSeek story was one that you originally helped us understand.
And that's a great point, right? And I think this theme of, necessity as the mother of invention is the common thread that runs through a lot of industries where America is becoming very competitive. Us limiting tools, American innovation has actually just spurred Chinese industries to come up with their own. And that's a really key point as we think about how effective these export bans are going to be when we have so much other stuff at stake, like, a potential trade war. So Huawei is just another example here. I mean, I remember I've been talking about Huawei for many, many years since I lived in China, and it was seen as, not a serious competitor at all, and that has certainly changed, especially over the last few years. They're making breakthroughs that, quite frankly, no one thought was possible years ago.
Right. That's the dangerous thing about decoupling. Dee, fantastic. Thank you, Deirdre Bosa, this morning, talking some China.